Welcome to the deep dive. You've probably heard the buzz lately, especially around AI companies, the ones working in those hot areas like national security.
Yeah, definitely getting a lot of attention.
And BigBear.ai, BBAI on the stock exchange, it's one that keeps popping up. But, we've seen this before. The surface excitement around AI, it doesn't always match the reality underneath.
It really doesn't. The market's booming, sure, but the companies themselves are so different. For this deep dive, we looked at a specific stack of sources just on BBAI to get an up-to-date picture as of June 2nd, 2025.
Right. And our mission today, it's pretty straightforward. We're going to unpack these sources together for you. Pull out the key stuff,
Cut through the noise.
Exactly. Cut through the hype and see what's really happening with their business, their financials, and frankly, some pretty big risks that these sources are flagging.
Yeah.
Everything we talk about, it's from this material. We've linked it in the description if you want to dig in yourself.
And looking closely at those details, especially in the filings, is really crucial here, given some of the recent history we're about to get into.
Oh, absolutely. And hey, before we jump right in, just a quick reminder, like and subscribe to Stock Analytics AI. If you're a member, that's Euro $4.99 a month. Give us a ticker, and we'll prioritize it for a deep dive analysis like this one.
Yeah, we really value your input on what to cover next.
Definitely. Now, as we were digging through this stuff, some things really jumped out. Honestly, some red flags that might make you reconsider what's driving the stock's price right now.
Yeah, there's some concerning activity sort of behind the scenes.
We found some stuff we'll connect the dots on later towards the end, so definitely stick around for that.
It's a complicated picture. Lots of moving parts.
Okay, let's get started. Subscribe. All right, so first off, BigBear.ai. The sources describe them as providing AI-powered decision intelligence solutions. What does that actually mean? Like, what do they do?
Okay, think of it as using complex AI data analytics to help organizations make better, faster decisions. The sources say their main focus is national security, supply chains, and digital identity.
Okay.
Their mission statement is something like, build and deliver AI solutions that work in the most demanding and complex environments. They're based in McLean, Virginia, and they went public back in 2021 through a SPAC.
Right, the SPAC route. Demanding and complex environments sounds like high stakes. Also sounds like it might need a lot of custom work.
Exactly. That's a really key point from the sources. Working in national security, for example, it sets a high bar. Reliability, performance, all that.
Sure.
But it often means the solutions are, well, bespoke, tailored for specific government agencies, maybe complex industrial setups. It makes it way harder to just scale a standard software product compared to, say, a simple app.
And that difficulty in scaling, that ties into some of the other issues, financial, operational things.
It does, yeah.
Yeah.
It connects directly to some things highlighted in the sources, like the internal control weaknesses we'll definitely get into later. It makes profitable scaling tricky.
Gotcha. So high-stakes missions, specific markets, what kind of actual products or services are they selling?
Well, they've got a pretty broad portfolio. It's built around what they call an end-to-end data analytics platform. The sources mention AI orchestration, digital identity stuff, including facial recognition tech.
Okay.
Computer vision for threat detection, so that came from acquiring Pangem last year in 2024. Cyber tools, predictive intelligence, modeling, and simulation too.
Wow, that's a lot. AI, cyber, identity, vision. Does having such a wide range cause problems or, stretch them thin?
It certainly can. I mean, on one hand, it shows ambition, right? Broad reach.
Yeah.
But looking at the financials in these sources for a company their size and with their financial health, maintaining and developing all those different lines takes serious R&D cash, and it definitely risks diluting focus, especially when money's tight. It's a common challenge trying to be all things to all people.
And their business model, it's not just selling software licenses, is it?
No, definitely not. And this is really important based on what we're seeing in the sources. If you look at their FY24 revenue breakdown, only about 45% was standard software.
Only 45. What was the rest?
35% came from building custom AI systems, and another 20% was advisory services like consulting.
Okay, so that's over half, 55% coming from custom work and services. Why is that split so critical for understanding them?
Because it hits their profitability hard. Custom jobs and consulting, they just have much lower gross margins than selling the same software product repeatedly.
Makes sense.
And the sources really highlight this. BBAI's gross margin in Q1 2025, just 21.3%.
Wow, 21.3.
And the sources compare that to, say, Palantir, a more pure software player, cited with over 80% gross margin. That huge difference on more than half their business, it's a major reason they struggle to actually make a profit.
So the sources basically say they're more like a government contractor or systems integrator.
Pretty much, yeah. One quote was something like, still more of a systems integrator and government contractor than a software AI company. That low margin profile explains a lot.
That comparison really drives it home. So this revenue mix relies heavily on contracts, especially U.S. government ones.
Exactly. DoD, intelligence agencies.
Yeah.
That's a huge chunk of their business, according to the sources. They're trying to grow commercially, but government work is still the bedrock.
And government contracting, doesn't that mean revenue can be kind of unpredictable? Lumpy is the word you hear a lot.
Absolutely. Contract wins, funding cycles, political shifts. It makes revenue forecasting really tough, not smooth like subscriptions.
Right.
The courses even mention hypothetical risks, like what if there's a big defense budget cut? Say $50 billion. That could hit them. So diversifying commercially is vital, but success there at scale isn't proven yet.
Okay, got a handle on the business now. Let's shift gears. Let's talk about management, governance, and crucially, the financial picture, which the sources suggest is pretty challenging.
It really is.
Yeah.
Leadership-wise, the CEO is Kevin McAleenan. Strong government background, DHS, CBP. He came in with that Pangiam acquisition.
Okay.
Julie Peffer is the CFO. And Ted Tanner Jr., the CTO, has a deep tech background, IBM, Apple, Microsoft. So, their experience seems relevant to BBAI's focus areas.
And the board oversight, anything notable there?
Yeah, actually a positive development highlighted in the sources. Back in December 2024, BBAI stopped being a controlled company.
Meaning?
Meaning AE Industrial Partners, a private equity firm, no longer held the majority vote. That triggered stricter NYSE rules. They needed more independent directors on the board and key committees, like audit.
Okay. Better governance.
Generally seen that way, yes.
Yeah.
As of April 2025, the sources say their board majority and the audit committee are independent. They're phasing it in, but it's a step towards better accountability.
Good to hear. But okay, let's address the elephant in the room from these sources, the financial reporting crisis.
Yeah, this is probably the single most critical issue detailed. In March 2025, BBAI announced that investors should not rely on their financial statement.
Not rely. Which ones?
All of them. Going back to fiscal year 2021, they said they'd have to be restated.
Wow, 4 years of financials basically pulled? That's huge. What was the root cause?
The main issue they cited was incorrect accounting for a feature in their 2026 convertible notes, specifically the conversion option.
Okay.
They apparently failed to treat it as a derivative liability, which needs to be marked to market, measured at fair value each period. It's a complex accounting rule, sure, but one they got wrong.
And missing something like that, it points to bigger problems, right? Like with their internal processes.
Exactly. They had to disclose a material weakness in their internal control over financial reporting.
Material weakness. Define that quickly.
It basically means there's a reasonable possibility that a significant error in the financial statements wouldn't be prevented or caught in time by their internal systems. In this case, they weren't consistently applying technical accounting reviews for complex stuff like those convertible notes.
That sounds serious. Are they fixing it?
They say they are. Management outlined a remediation plan, enhancing reviews and so on. They expected to finish it in Q2 2025. But the sources are clear. As of March 31st, 2025, their overall disclosure controls were still not effective because of this weakness.
This must have ripple effects beyond just the accounting numbers.
Oh, absolutely.
Wow.
It shreds the credibility of their past financials, obviously shakes investor confidence, and, as the sources detail, it directly led to multiple securities class action
Lawsuits.
directly because of the restatements.
Yep. Filed against the company and some officers. The allegations are basically making false or misleading statements about their financial health and controls.
The sources even mentioned a lead plaintiff deadline June 10, 2025 for those cases. These lawsuits are expensive, a massive distraction for management, and a big financial risk down the line.
Okay, what a mess. So, looking at the actual performance, using the restated numbers, how does the business look financially?
Putting it gently, it looks challenging. The restated numbers in the sources show revenue growth has been, well, sluggish is one word used, and lumpy.
Right.
FY24 revenue was barely higher than FY23 or FY22. Q1 2025 growth was pretty minimal, under 5% year over year. Most of the growth seems tied to acquisitions like Pangiam. not strong organic expansion.
And those low gross margins we talked about earlier, because of the services mix, still low.
Persistently low, yeah. Around 21 to 28%, confirming that impact. And because of those thin margins combined with high operating costs, the company has just shown deep, consistent operating and net losses.
What did?
Well, the net loss in FY24 was huge, nearly $300 million.
Yeah.
Q1 2025 saw a loss of $62 million. Earnings per share, consistently negative.
Those are really big losses. What's driving the high operating costs? SG&A.
Yeah. Selling, general, and admin expenses are high, like 65% of revenue in Q1 2025, plus R&D spending. And another really concerning detail highlighted is the significant goodwill impairment charges they've taken.
Goodwill impairment. Remind us what that signifies.
Sure, when you buy a company, you often pay more than its tangible assets are worth. That extra amount is goodwill on your balance sheet. An impairment charge means you're admitting that extra wasn't actually worth what you paid the acquisition hasn't performed as expected.
So it suggests past acquisitions might have been overvalued.
Exactly. They took an $85 million charge in FY24, over $50 million in FY22. It raises serious questions about their past M&A strategy and capital allocation. Did they overpay? Did the deals not work out?
That's not a great sign. Okay, so big losses on the income statement. What about actual cash moving in and out? Cash flow.
Also critical, and also a problem area, according to the sources. Cash flow from operations has been persistently negative.
Meaning they're burning cash just running the business.
Yes. They used over $6 million in Q1 25, just from operations, nearly $40 million in FY24. And free cash flow, which is what's left after capital expenditures crucial for long-term health, has also been deeply negative, like negative $49 million in FY24.
Wow. Okay, negative cash flow means they constantly need money from somewhere else. How's their balance sheet?
Wow.
Debt, funding.
They do have debt, mostly convertible notes. Now, some debt has been reduced because holders converted it into stock, which helps metrics like debt to equity.
But that conversion means dilution for existing shareholders, right?
Exactly. Existing shareholders own a smaller slice of the company each time that happens.
Okay.
And because they're burning cash, they need funding. Management stated, according to the sources, that their current cash plus their ATM at the market equity program should be enough for the next 12 months.
The ATM lets them sell shares directly into the market.
Right. As of March, they had over $140 million left on that facility. But
there was recent news.
Very recent.
Yeah.
June 2nd, 2025, BBAI announced they'd set up an additional $150 million ATM program.
Another $150 million on top.
Yes. It basically confirms they have an ongoing need for cash because of the negative free cash flow, and signals more dilution is likely coming for shareholders.
So, constantly needing to sell stock to keep the lights on. Are there other financial red flags? Covenants?
There's a minimum liquidity covenant. On some notes, they have to keep at least $15 million in cash. They were okay as of March, but with the cash burn, it's something you have to watch closely. And maybe the most stark warning sign, the Altman Z-score.
Altman Z, that predicts bankruptcy risk, right?
It does. It's a formula based on several financial ratios. And BBAI score, per the sources, is incredibly low.
0.3 or low.
And what does 0.3 mean?
It puts them squarely in the distress zone. Statistically, it signals a high probability of bankruptcy if they can't turn the financial fundamentals around, and soon.
That's sobering. But they do have that big backlog of contracts, right? Isn't that a positive sign?
They do. The sources mention ranges like $385 million up to $480 million. And it's growing, which looks good on the surface. It represents potential future revenue.
There's always a but. The huge but here, considering everything else, is converting that backlog into profitable revenue. Given the consistently low gross margins and the massive operating losses, just having a big backlog doesn't guarantee they'll ever actually make money from those contracts. That's the core challenge.
Okay. Business model, leadership change, huge reporting crisis, lawsuits, grim financials. Let's look at how the market views BBAI now and pull together the key risks.
Right. The stock itself. Pure volatility, according to the sources, beta of nearly 3.
Meaning it swings way more than the market average.
Way more. And the performance is, well, a mixed bag that reflects that volatility.
How so?
Over the past year, it's up massively, like over 170%, probably riding that general AI wave.
Yeah.
But year-to-date 2025, it's down about 9%. And it's still way down, over 58% from its SPAC IPO price.
And the price range this year has been what?
Huge range. It hit over $10 back in February, then crashed down near $3 by May. Those drops often lined up with bad news.
Like the financial restatement news.
Exactly. The sources mentioned like a 15% drop when they announced the non-reliance and delayed their 10K, another 9% drop when the ugly details actually came out in the restated filing. Lots of trading volume, too, suggesting short-term speculation adding to the swings.
What are the Wall Street analysts saying?
There's coverage, but it's a bit conflicted.
Yeah.
Often a buy consensus from the few analysts covering it, but the commentary seems packed with caveats about the risks and fundamentals.
A cautious buy. How does that work?
It reflects the uncertainty, the tension between, AI is huge, but this company has serious problems. You see it clearly in the price targets cited.
Oh, yeah. Big range.
Massive range. Sources mention targets from as low as $1.52 all the way up to $6.30. Average targets also vary a lot, like $4 to over $6, depending on which consensus you look at. That wide spread itself tells you how uncertain things are.
And have estimates been changing?
Yes, downward revisions recently to FY25 earnings estimates. And significantly, the company's own guidance for FY25 revenue, it came in well below what analysts were expecting.
Missed expectations.
Yeah, and one source noted they've actually missed analyst revenue estimates for 8 straight quarters.
8 quarters. Wow. That points to consistent execution issues. Okay, who owns the stock? Many institutions. Insiders.
Institutional ownership is, well, fairly modest. Around 23.5% according to one source. You see big names like BlackRock, Vanguard holding some, but the relatively low percentage might suggest larger, maybe more conservative institutions are staying away because of all the risks.
Good insiders, management.
Pretty low, around 3%. But speaking of insiders, that brings us to that red flag you mentioned earlier, recent activity. Yes, and this is really striking from the sources we looked at, a distinct pattern of insider sales just recently in May 2025.
Who is selling?
Specifically, multiple sales by the Chief Financial Officer, Julie Peffer, and also Chief Accounting Officer, Sean Ricker. Plus, a director, Dorothy Hayes, also sold in May.
Wait, the CFO and the Chief Accounting Officer selling stock while the company is publicly dealing with major accounting restatements and material weaknesses.
That's exactly the pattern highlighted. Key finance executives, the ones who should know the financial situation and the remediation challenges best, selling shares during this incredibly turbulent time. The market often interprets that very negatively.
Yeah, you could see that as a lack of confidence, right? Regardless of any stated reasons for selling.
It's certainly a concerning signal. And it wasn't just them.
Who else?
There was a very large sale by Panjim Ultimate Holdings, LLC. They're a big 10% owner, linked to that director who also sold. In April 2025, they sold over 27 million shares, worth around $78 million.
Okay, so top finance execs and a major related entity selling shares recently. What about the shorts? People betting against the stock.
Short interest is high.
Yeah.
Very high. Around 21% of the float, based on recent data in the sources.
21%. That's a strong bearish signal.
It is. It means a lot of market participants are actively betting the price will fall further. The days to cover isn't super high, so maybe not an imminent squeeze from covering alone, but that 21% figure shows strong negative conviction.
And that new $150 million ATM offering, does that feed the shorts?
It can, yeah. More shares available potentially makes it easier to borrow stock to short, and it reinforces the narrative that the company needs cash, which is often what shorts are betting on financial distress.
Okay, let's try to pull this all together. Based purely on these sources, what are the biggest risks facing BBAI?
Synthesizing it all, you've got major risks across the board, business-wise. Intense competition, that heavy government reliance, we talked about budget risks, contract termination risks, the big challenge of actually making profit from their backlog due to those low margins, and just the general risks of integrating acquisitions and managing diverse tech.
And then the financial risks, which seem enormous.
They really are. The core unprofitability and negative cash flow, the huge credibility damage from the restatements and control weaknesses leading directly to those lawsuits which are costly and distracting, the debt covenants they need to watch, like that $15 liquidity minimum, the constant shareholder dilution from selling stock via ATMs, and just overall high valuation risk, the price seems, based on hype, not reality, especially with that terrible Altman Z-score looming.
Any other risks? Regulatory? Tariffs?
Yeah, AI regulation is evolving fast, especially for sensitive areas like national security or identity tech. That can mean higher compliance costs. Data security is obviously huge for them, too. As for the 2025 U.S. tariffs mentioned, the sources suggest minimal direct impact since they're mainly software and services.
Okay.
Guru Focus even gave them a decent score on tariff resilience. Indirectly, though, if tariffs slowed the whole economy, that could eventually hit client spending, but it's less direct.
Right. So we've covered the business, the financial crisis, the
Yeah.
market view, the risks. Based on all the source material, let's try to land the plane. What's the takeaway?
Okay, so looking at this strictly through a value investing lens, focusing on current earnings, tangible assets, a margin of safety. The picture from these sources as of early June 2025 is, well, it's complex and frankly unfavorable right now.
Despite the AI hype.
Despite the hype, the company's in an exciting space, yes. AI, national security, that's appealing. But the fundamental problems highlighted in the sources, no profits, burning cash, damaged credibility, lawsuits, high execution risk, these are huge hurdles.
It feels like the current stock price is banking heavily on them, overcoming all that. A lot of hope baked in.
Exactly. The market price seems to have a massive hope premium built in. Based only on analyzing these specific sources, it's really hard to pin down a fundamental value. But the current price just doesn't look justified by the actual performance or the significant risks involved.
So for a value-focused investor looking just at this source material, what's the bottom line?
Based on this comprehensive analysis of these sources as of June 2, 2025, an investment in BBAI at current levels is not recommended. We'd assess it as a sell avoid.
And the main reasons, just to recap from the sources.
Persistent lack of profit and positive cash flow. The severe credibility damage from the restatements, control weaknesses, and the resulting lawsuits. The high overall risk execution, competition, government dependence, zero margin of safety at current valuations. And that really concerning pattern of recent insider selling coupled with ongoing dilution.
What would have to fundamentally change for that assessment to shift based on value principles?
You'd need to see hard evidence, a sustained track record of actual profitability, consistent positive free cash flow generation, proof that the internal controls are fixed and working effectively, and resolution of those potentially costly lawsuits. None of that seems imminent based on this information.
Okay, now let's circle back to that tease from the start. The red flags, the concerning activity.
Right, so the obvious red flags are the financials, the restatements, the losses. But that other layer, the really concerning signal from the sources, was that pattern of insider selling.
The timing of it.
Exactly. The CFO, the chief accounting officer, a major owner, selling shares in April and May 2025. Right in the middle of trying to fix these huge financial reporting problems, and while the company is telling the market it needs to keep selling stock to fund itself, that's a powerful, potentially negative signal from the people who know the most.
It adds a whole other dimension to consider. Okay, so here's the final thought we want to leave you, the listener, with today. How do you weigh this up? You've got a company in a super hot sector, AI, working on critical stuff like national security, but
the fundamentals are weak. The financial history is under a cloud of restatements and lawsuits, and key insiders are heading for the exits with their own shares.
does that market excitement, the AI story, outweigh all these tangible, documented risks we found in the sources?
That's the multi-million-dollar question you have to wrestle with based on this deep dive.
That wraps up this deep dive.
Subscribe. Stock Analytics AIYT.
And please remember, this analysis is based strictly on the specific sources we reviewed, current as of June 2, 2025. That includes their SEC filings like the restated 10K, the Q1 10Q, and other reports. This is absolutely not investment advice.
Definitely not. Our goal is to highlight the findings and significant risks from the material, the speculative nature, the restatements, the control weaknesses, the lawsuits with that Juneteenth deadline coming up.
Always, always do your own thorough research, dig into the sources yourself, and consult with a qualified financial advisor before making any investment decisions.
Thanks for tuning in to this deep dive.